Happy New Year and welcome to the January 2025 monthly Motor Checkup. My name is Dave Lundgren and I'm the Chief Market Strategist and Portfolio Manager here at Motor Capital Management and Research. The name of the video this month is Dream the Impossible Dream. Before we get into it, just a quick moment to review the disclosures, as always. So a natural preference when making decisions, especially consequential ones, is to have confidence in what we think we know. When we don't have that confidence, we seek the input of experts such as doctors, lawyers, and accountants. Now, despite the overwhelming evidence to the contrary, both we and these supposed experts have unjustified confidence in our knowledge of the future, especially as it relates to the stock market. Especially now, given the contrast between the bullish configuration of the market's internals, which I'll get into through this video, contrasted with the dire outlook of many of the experts, it is critical we and our experts question what we think we know. The market knows everything you and I think we know, and despite all the fear-mongering from many of the experts, it seems to be saying that something more optimistic lies in the future. Now would be a good time to dream the impossible dream. So this is a chart that I've focused on many times throughout the course of these videos over the past, unfortunately, I guess 2 or 3 years because it's been going on for so long. But this is the value line geometric average, which you can see up here. And this just represents what the average stock is doing beneath the surface. So we know that the S&P 500 is up here somewhere, and yet the average stock is still way down here. And that's obviously a considerable disconnect between what the cap-weighted indices and the average stock is telling us. And this is significant because this is not normal. It's not unprecedented. This has happened before, and it is true that most times this has happened in the past to this degree. It's ended badly, but it's not always bad. And so that's why we think it's important to follow the data as it is today and just follow those incremental changes as they unfold. And as it stands right now, the data is good and getting better. So what we know about this index is that it's been in a nearly a 2-year base. So we have this bear market, of course, it happened in 2022. And then since then, we've basically been going sideways for nearly 2 years. And as early as the first and second quarters of 2024, the average stock was still down about 18% from its 2021 peak, and that's with the S&P breaking out to new highs. And even just as of right now, as of this writing, the average stock is still, according to the value line geometric average, is still down 10% from its 2021 peak. So again, this is not your traditional bull market. I'm not saying it's not a bull market, but it's definitely not one that's fully exploited and in my mind, ripe for reversal because as I'll show you, you can make the case that this is only just getting going. So this is what's different in relation to this sort of range-bound environment that we've been in. We are now starting to make progress up and out of this base. And at the margin, that's an improvement. Things are going from good to kind of neutral to good and getting better. And that's a very important distinction to make. With the December correction, which was actually internally quite a correction, it was almost about a 10% decline for the average stock, which again was hidden by the performance of the Mag 7, which kept the average stock from declining much. But since then, we've begun to recover once again. And what the case that I want to make is that we're on the verge of beginning a rather robust bull market through 2025. Now, I've made this case before, and I've also walked through some of the things that even though this is what the market appears to be saying, I've walked through even the things that do concern me, which was valuations and the performance of industrial metals versus precious metals and several other things. These are all things that do concern me. But as I'll show you again, and I'll reiterate in this video, there's nothing that I know that the market doesn't already know, and yet it's doing what it's doing. So the idea would be that the market is focused on something that I'm clearly not focused on. And I would say that would seem to be, at least in conversations that I'm having, that seems to be the case for most investors, not just myself and not just the experts. So what's interesting is that this chart here is the long-term chart back to 1974 of the value line geometric average. So I want to point this out because of two things. One, we may have the impression that the value line geometric average just doesn't go up, but that's just not the case. From 74 to late 1990, this index fully participated in what was happening uh, uh, with the large cap, cap weighted indices, I should say. And so the base that I've been talking about is right here, and you can see that it's still divergent. The S&P is up here somewhere, and the average stock is still divergent. And you can see that we've had similar divergences at other times in history that ended obviously quite badly. Yeah, this was another one here. So for this reason, we want to be mindful that this is a divergence, but at this stage of the game, given the data that I've shown you and I'm going to show you, I'm still of the mind that things are good and getting better. This was a similar divergence, and this particular divergence ended rather strongly on the upside. And at this point in time, that's what I'm anticipating here. So the points I want to make here on this chart, however, are in this window of time, the average stock benefited greatly from this great disinflationary trend in the 80s and 90s. So the 70s, of course, was all about inflation, runaway inflation, in fact. And when that inflationary trend was broken, we ushered in a deflationary trend, which was very bullish for virtually most stocks in the market. And so you had a very robust bull market from not just the S&P, but the average stock as well. Now, for the past 20 years, this average, as you can see, has basically been in a range. And I've shown many charts to demonstrate this, but this inflection that we went through here, basically starting with the peak in 98, is really when the throes of deflation really started to wrap around the globe, starting in Japan, really back in the 90s. But it really started to accelerate with the emerging market debt crisis and other things that really kind of ushered in this deflationary pressure, which is not good for stocks. So throughout this 20-year period, although the S&P is way up here, the average stock has still been mired in this bear market. And what we can see now, finally, is that the market is now just starting, at least from this perspective, to get going again. And when you just kind of step back and look at this base, it kind of looks like a head and shoulders continuation pattern, which gives some pretty bullish projections to the upside over the next, say, 10 or 20 years. So what might this be is a reflationary trend that sort of unlocks or is the catalyst for unlocking the market from this deflationary range that it's been in. And so again, I don't know if this is what's happening, but what I do know is that as long as the internals of the market continue to suggest that the market's primed to go higher, I think it's better to think about what could go well here, what could turn out positive here relative compared to what everybody else is kind of pointing to on the bearish side, because the configuration of the market suggests to me that we're going higher. So let's try to think about more creatively and more optimistically about what could happen on the plus side in 2025. Now, this is the U.S. market. When you look at the same sort of condition globally, this is the MSCI World ex-US. Thanks so much for watching this clip of the monthly motor checkup video. We appreciate your interest in our research, and we hope that you are finding it helpful and informative. If you'd like to continue watching this video, as well as access our most recent monthly motor checkup, sign up for a free 30-day trial to all of our research at motorcmr.com. You'll find a link to our website in the description below. As always, like and subscribe to be notified of future content.